Some TV, the pulse of the nation. Some TV, the pulse of the nation.
When a tanker bearing fuel falls or an underground pipe bearing fuel bursts, what do? Scooping fuel in your bucket or running far away from impending fire? You have a few seconds to take the wisest decision. Walk away? No, that is not enough. Shift? No, that is not enough. Stay there and gist and take shots with your phone? That is madness. Run. Yes, run away. Yes, your life depends on your action. The flames come suddenly, unexpected but uncontrollable. Why? Fuel is highly inflammable. Why? It just requires a spark to set off a ravaging inferno. So, don't stay there to think. Storm away to live. Do not throw away your life in anguish for meaningless fuel siphoning. Be advised.
Good afternoon and welcome to Business Daily on Some TV, the pulse of the nation, your trusted source for in-depth analysis, market trends, and key drivers shaping Nigerian economic landscape. I am Teresa Ayuba, and here are some of the headlines for today. Banking stock poised for gain as Nigerians' inflation slow and rate cuts loom. Naira slips to 1,533.67 per dollar amid improved market outlook. Lagos rental market under strain, household stock at 1.38 million despite population surge. Now the news in full. Nigerian banking sector is expected to benefit from the country's slowing inflation rate, which dropped to 21.88% in July 2025, its lowest since January 2023. This trend could lead to the cut in the monetary policy rate MPR, making borrowing cheaper and stimulating credit growth. Nigeria's annual inflation rate eased to 21.88% in July 2025, down from 22.22% in June, making a fourth consecutive declaration in 2025. Analysts predict a possible 25 basis point cut in the MP3 to 27.25% in the September MPC meeting, which could boost banking stock. The NGX banking index has reeled from 7% in Q1 to 48% as of August 15th, adding about 6 trillion naira, $3.9 billion in market value. Analysts are divided on the potential impact of a rate cut on banks' earnings, with some expecting stronger loan growth and improved profitability, while others warn of downside risks. Disinflation and the expectation of lower MPR are broadly supportive for bank stocks. Lower interest rates are a negative for the top-line earnings of bank as interest income from the loan and security will decline. A rate cut will drive yield on fixed income assets lower, prompting investors to rotate into equities. Elevated CRR requirements and lingering inflation risks could temper the upside, and investors should balance optimism with caution. The Nigerian Naira started the week on a negative note, trading at 1,533.67 per dollar on the Nigerian foreign exchange market. This represents a 0.08% decline from the previous week close of 1,532.51 per dollar. The exchange rate fluctuated between an intraday high of 1,535 per dollar and a lower of 1,532 per dollar despite the recent dip. The Naira stability is expected to continue, driven by the Central Bank of Nigeria intervention and improved foreign exchange inflows. Nigerians' average daily crude production increased to 1.5 million barrels per day in July, exceeding the OPEC quota for the second consecutive month. The US dollar index DXY strengthened above 98 points, driven by expectation of potential trilateral meeting between US President Donald Trump, Russian President Vladimir Putin, and Ukraine President Volodymyr Zelensky. The CBN urged Nigerians to report any bank employees or officials involved in the illicit trade of new Naira notes. The Naira stability is expected to persist, bearing significant shock to global markets. Declining crude oil prices could limit the Naira future gains. Market confidence is rising, driven by the CBN's strategic efforts to promote the domestic economy. A recent report reveals that the number of rental households in Lagos has remained stagnant at 1.38 million between 2016 and 2025, despite a significant population surge. The city's population grew from 21 million to project 24 million during the same period, resulting in an increase of 7,050 households. The household deceived in Lagos widening to about 3.4 million units in 2025, comprising 0.62 million units in quantitative shortfall and 2.78 million units in poor quality housing. House rent in Lagos skyrocketed by over 100% just 4 years, far outpacing household income that largely remained stagnant. Many families are forced into informal housing, overcrowded units, or self-built homes due to affordability pressures. Residents are struggling to cope with the rising rental costs, with some families cutting back on essentials or relocating further for a workplace. The stagnant rental number may reflect affordability pressures, forcing many families into overcrowded or informal housing. Lagos requires 227,576 new homes annually to keep pace within population growth and replace depleted stock. The actual delivery of new homes remains far below the benchmark, compounding the city household crisis. The Nigerian stock market closed lower on August 19, 2025, losing 2,109 points, with all-share index declining by 1.46% to 142,613.47. This downtrend reflects a broader market trend, with market capitalization slipping to 90.2 trillion naira. Gainers, Enimon were 9.95% increase to 35.90 naira. Their Communication 9.82% raise to 1.23 naira. Deep Cap 9.60% growth to 1.94 naira. Losers, Royal Exchange 10% decline to 2.52 naira. Dangote Cement 9.88% drop to 520 naira. RT Briscoe 9.87% fall to 3.56 naira. Trading activity volume 1.02 billion shares traded, down from 1.05 billion shares in previous session. Value, Nigerian breweries led with trade worth 2.1 billion naira, followed by Dangote Cement 1.3 billion naira and Access Holdings 1.04 billion naira. Market outlook. The market is expected to continue its retracement phase, with the index potential dipping below 142,000 and possibly 141 if bearish momentum persists. Further weakness is large cap stock could exacerbate the market decline. The recent drop in global oil price poses a significant threat to Nigerian fiscal plan for 2025. On Tuesday, August 19, 2025, oil price fall due to potential easing of sanctions on Russian crude leading to increased supply. Brent crude declined by 1.0% to $65.93 per barrel, while West Texas Intermediate WTI dropped by 1.23% to $62.64 per barrel. Major oil-producing countries include the U.S. and OPEC, are pumping more oil into the market. Economic slowdown in key markets like China and Europe are reducing oil demand. A stronger dollar makes oil more expensive for countries using other currency, leading to decreased demand. Lower oil price means less revenue from oil export, straining the government budget. Decreased oil revenue could weaken the Nigerian naira, leading to higher price for important goods. Nigerian 2025 budget deficit may increase due to low oil price, potentially reaching 30.79 trillion naira. The government is working to devastate the economic, reducing dependence on oil. Efforts are being made to boost non-oil revenue through robust revenue assurance initiatives. The government is prioritizing spreading of critical infrastructure like road, power, and food securities. The African Development Bank (AFDB) has revealed that Africa loses more than $580 billion every year to corruption and illicit capital outflow. This strategy losing sufficiently undermine the continent's economic progress and depend its debt woes, with total debt burden nearing $2 trillion, breaking of laws, illicit financial flows $90 billion annually, profit shifting by multinational corporation $257 billion, corruption $148 billion, impact on African economic and infrastructure financing gap $170 billion annually, hindering economic growth and job creation. Debt servicing: African governments spend more on interest payments than public health care, with same countries allocating up to 75% of their revenues to debt servicing economic growth. Curbing corruption and illicit outflow is crucial on safeguarding African resources and reducing resilience on debt. Akinwumi Adesina emphasized that reducing leakage from illicit capital, corruption, and other forms of financial mismanagement is essential for Africa to retrain its resources and meet its infrastructure needs. Despite agriculture's significant contribution to Nigeria's economy, the sector export earnings have dwindled to less than $400 million. This consigned trade was highlighted by Senator Abubakar Kyari, Minister of Agriculture and Food Security, at the First Bank of Nigeria Limited 2025 Agri and Export Expo in Lagos. Nigeria earned less than $400 million from agriculture export, a paltry sum considering the sector's substantial contribution to the nation's GDP. The minister emphasized the need for improved financing mechanisms to boost agricultural productivity and export earnings. The federal government is committed to ensuring Nigerian food sovereignty and reducing dependence on import and exchange domestic production. The government plans to subsidize agricultural input by 50% to support farmers and boost productivity. Kyari stressed the importance of adding value to agricultural products to increase their export potential. Improved mechanisms such as revenue sharing and factoring forward contracts can help boost food security and agriculture exports. In a significant relief for Nigerian 172 million telecom subscribers, President Bola Tinubu has scrapped the planned 5% excess duty to telecommunication service. This decision comes amid growing concern over poor service quality, including data depletion, dropped calls, and failed up-tops. Despite a recent 50% tariff hike, the 5% excess tax was initially introduced in 2020 Finance Act to boost government revenue. However, industry stakeholders and the public strongly oppose it, arguing it will increase service costs and burden consumers. In July 2023, President Tinubu suspended the tax, citing concern about its impact on businesses and households. This latest development marked a significant end to policy. Chief Diolu Ogunbanjo described the new as certain, stating that the removal will stabilize price and prevent further tariff adjustments by service providers. Netcom has agreed to withdraw its case from the Federal High Court. Ikoyi Banga Adebayo welcomed the outright removal, expressing hope that it will bring relief to subscribers. However, he cautioned that the industry awaits the full report to ensure no additional taxes are imposed elsewhere. The cancellation of the tax is expected to ease cost pressures on subscribers and support the growth of the telecommunication sector, a key driver of Nigerian digital economy. However, subscribers continue to decry poor telecom service, accusing the Nigerian Communication Commission (NCC) of inaction. The NCC has partnered with the Central Bank of Nigeria and Financial Institute to tackle failed telecom transaction and improve service quality. The Commission has also reversed its quality of service guideline, extending accountability to include co-location service providers to our course. We're taking a brief commercial break. When we return, Business Daily continue.
Are you stuck in Jalingo late at night? Need a safe and reliable ride fast? Introducing Supercab, Jalingo's trusted ride-hailing service from anywhere in the city. We will pick you up right at your doorstep. Book a ride in seconds. Safe, fast and affordable. Visit www.supercab.com.ng or download the Supercab app today. Supercab, your ride your way. Are you stuck in Jalingo late at night? Need a safe and reliable ride fast? Introducing Supercab, Jalingo's trusted ride-hailing service from anywhere in the city. We will pick you up right at your doorstep. Book a ride in seconds. Safe, fast and affordable. Visit www.supercab.com.ng or download the Supercab app today. Supercab, your ride your way.
Welcome back. The Nigerian Exchange Limited (NGX) experienced a significant downturn yesterday, with its overall capitalization declining by 1.334 trillion naira due to sell-offs of Dangote Cement PLC and 38 other stocks. The all-share index dropped by 2,109 points, representing a 1.46% loss, to close at 142,613.47 points. Market capitalization value lost 1.334 trillion naira, closing at 90.227 trillion naira. Large and medium capitalization stock includes Dangote Cement, CAP, Zenith Bank, Nigerian Exchange Group, and NASCON. Align Industry drove the market negative performances. Total volume traded fell by 10.4% to 1,027 billion units, value at 17.664 billion naira, and exchange in 34,352 deals. Afrinverse Limited expects the bearish performance to persist due to profit-taking activities, while Vitavia dealings and brokerage anticipate risk-off segment to continue, with potential attractive entry points for investors in fundamental strong names as discount level. The Nigerian Port Authority's NPA has disclosed that developing deep-sea ports across the country may not materialize due to a significant funding gap and lack of investors' interest. According to the NPA Managing Director, Dr. Abubakar Dantoho, the capital-intensive nature of deep-sea port development, which costs not less than $2 billion in investment, has detained potential investors. Developing deep-sea ports requires substantial investments with estimated costs ranging from $2 billion to $3.7 billion, as seen in the Badagry Deep Sea Port project. Dansoho noted that no investor is attracted to investing in Nigerian's deep sea port development, especially with no returns on investments due to cargo diversion to other countries. Nigeria has lost its cooperative advantages, with competitors dominating trade routes due to investment delays. From NIMASA, Director General Dr. Timisan Omotasie expressed concern over the steady diversion of vessel traffic from Nigerian ports to Lome, Togo, due to policy decision discouraging ship-to-ship operation offshore Lagos. The president of ANLCA, Emeka Uokoji, lamented that shippers are still paying war risk insurance premium, making freight to Nigeria higher than in other African countries. Dantoho urged policymakers and investors to move with global trade, emphasizing that without timely investment, Nigeria risks falling further behind the maritime industry. The president of LCCI, Gabriel Idahosa, stressed the need for stronger public-private partnership, benchmarking port operation against global leaders, and ensuring seamless integration of transportation modes. Jaiz Bank, Nigerian foremost non-interest bank, has announced a rebranding effort to boost non-interest banking and reflect its vision for the future. The bank unveiled a new corporate identity featuring a refreshed logo, vibrant color scheme, and payoff line with You for Life, deep blue, yellow, and gray, symbolizing trust, stability, optimism, innovation, and sophistication. Capital base tag is 150 billion naira, exceeding the Central Bank of Nigerian reciprocation directive. Jaiz Bank aims to become a dominant financial institute in Africa, contributing to Nigerian $1 trillion economic goal by 2030. The rebranding exercise represents a fresh chapter to Jaiz Bank journey as Nigerian pioneer non-interest finance institute. According to Managing Director Haruna Musa, the new identity reflects the bank's commitment to ethical, inclusive, and customer-centered banking. The Nigerian Governors Forum (NGF) has launched Investopedia, a digital platform designed to attract investment and bridge the country's significant infrastructure financing gap. The platform provides a transparent and credible gateway for investors seeking opportunities across Nigerian 36 states. Investopedia serves as a single platform for investors to access credible, transparent, and curated pipelines of projects across all 36 states. The platform highlights valuable opportunities in various sectors, including infrastructure, agriculture, energy, and technology. Investopedia is backed by strong partnership with organizations like Afreximbank, the United Nations Development Programme UNDP, and the Ministry of Finance Incorporated MOFI. Nigerian annual infrastructure finance gap is estimated at $100 billion, with states bearing the heaviest responsibilities to bridge this gap. Despite being Africa's largest economy, Nigerian foreign direct investor inflow have averaged over $2 billion annually, less than 0.5% to GDP, 17.5 trillion naira. States collectively budgeted over 17.5 trillion naira for capital projects in 2025, reflecting their commitment to transforming infrastructure and social services. Despite this allocation, finance constraints that fragment entry points often prevent investors from engaging at scale. The Kano Digital Innovation Network, KDIN, is set to host the biggest tech show in northern Nigeria in September, targeting around 5,000 tech innovators from within and outside the country. The conference theme Economic Resilience, addressing financial inclusion, food security, urban challenges, and green economy in Nigeria, is sponsored by KDIN in partnership with the Kano State Government. 5,000 tech investors, IT, ethics, entrepreneurs, investors, and government officials from Nigeria and abroad, including South Africa, Canada, US, Kenya, and Zimbabwe. Vice President Senator Kashim Shettima is expected to be the special guest of honor. KDIN will organize workshops for youth and women. That's all for Business Daily. Stay connected and stay informed. I am Teresa Ayuba. Do have a wonderful day.
Are you stuck in Jalingo late at night? Need a safe and reliable ride fast? Introducing Supercab, Jalingo's trusted ride-hailing service from anywhere in the city. We will pick you up right at your doorstep. Book a ride in seconds. Safe, fast, and affordable. Visit www.supercab.com.ng or download the Supercab app today. Supercab, your ride, your way.